What if I told you that regular investors like you and me are pouring more money into one particular stock than at any point in record history? This isn't speculation, it's hard data straight from JP Morgan showing that retail investors have pumped a staggering $8 billion into Tesla stock in just the past 13 trading sessions. That's the largest retail buying streak since they began tracking this data in 2015. What's up, everyone? Today I'm breaking down this surge in Tesla retail investment and what it could mean for your portfolio. While Wall Street analysts are busy downgrading the stock and major institutions are selling, everyday investors are buying at record levels. It's like watching a football game where all the professional commentators are predicting one team will lose, while the crowd is placing record bets on them to win. Who's right? Well, crowds aren't always wrong. Just ask anyone who bet against GameStop in 2021. Using MarketDash.io's tracker, we can see that retail interest in Tesla has exploded to levels never seen before, with search trends for buy Tesla stock up to 5 to 10x compared to the 12-month average. By the end of this video, you'll understand exactly what's driving this retail investor phenomenon, why Wall Street might have it wrong, and how you can potentially capitalize on this divergence regardless of which side you believe. So let's dive in. So why are retail investors suddenly piling into Tesla at historic levels? Let's connect the dots on what's actually happening. First, the stock has dropped over 50% from its December highs, erasing more than $150 billion in the market value. This dramatic pullback has created what many retail investors see as a rare buying opportunity for a company they believe in long term. Second, political events have put Tesla back in the spotlight. When Donald Trump purchased a Tesla Model S Plaid in front of the White House, global search interest for buy Tesla shot up roughly 3 times the 12-month average. Third, Elon Musk's role heading the Department of Government Efficiency has created both controversy and support. While some view this as a distraction, others see it as potentially beneficial for Tesla's long-term regulatory environment. It's like when your favorite indie band suddenly gets political. Some fans walk away, but the core believers just buy more tickets to the next show. Except in this case, the tickets are shares of Tesla stock. Finally, Tesla recently refreshed both its Model 3 and Model Y vehicles, causing temporary production adjustment that Wall Street analysts have misinterpreted as permanent demand issues. What makes this situation fascinating is the stark contrast between Wall Street sentiment and retail investor behavior. Morgan Stanley analyst Adam Jonas recently lowered his price target on Tesla, citing growing competition, aging vehicle lineup, negative brand sentiment, expected sales decline. Meanwhile, retail investors have been netting buyers for 13 straight sessions, invested $8 billion during this period, shown the strongest conviction in Tesla's history, increased buying as the price dropped. MarketDash's investor demographic tool shows something particularly interesting. This isn't just existing Tesla investors buying the dip. The data shows significant new retail investors entering Tesla positions for the first time. Wall Street looking at retail investors right now is like a parent watching their teenager make a decision they disagree with. They're thinking, you'll learn your lesson, while the teenager is thinking, you just don't understand the future. This isn't the first time retail investors have diverged from Wall Street consensus. Similar patterns emerged with Amazon in the early 2000s, Netflix during its transition to streaming, and Apple after Steve Jobs' return. All cases where retail conviction ultimately proved correct. So what exactly do retail investors see that many Wall Street analysts seem to be missing? First, many retail investors value Tesla primarily for its potential in AI, robotics, and autonomous driving. Not just as a car company, even Morgan Stanley's Adam Jonas acknowledged that 90% of Tesla's valuation could eventually come from these technologies. Second, Tesla's energy business is growing rapidly but receives minimal attention in most analyst reports. Energy generation and storage revenue grew 56% year over year in Q4 in 2023, yet it is barely factored into most valuation models. Third, Tesla's integrated approach to manufacturing software and AI creates competitive advantages that don't fit neatly in traditional auto industry analyst frameworks. MarketDash's valuation comparison tool shows that when valued as a technology company rather than an auto manufacturer, Tesla's current multiples actually appear reasonable relative to growth potential. It's like asking traditional auto analysts to value Tesla is like asking a horse and buggy expert to evaluate the first automobile. They might focus on how many horsepower it has while missing that it doesn't need any actual horses. Finally, retail investors tend to have longer time horizons than Wall Street analysts who are often judged on quarterly performances. A 5 to 10 year view of Tesla looks very different than a 6 to 12 month outlook. So the million-dollar question, should you join this historic wave of retail investment in Tesla? Let's consider both sides objectively. The bull case, stock has declined over 50%, potentially creating a value opportunity. Company continues to lead EV market with strong margins, energy business growing rapidly with massive potential. AI and robotics could represent enormous future value. Retail investors have been right about Tesla in the past. The bear case, increased competition in EVs globally, potential CEO distraction with political involvement, short-term delivery and production volatility, valuation still high compared to traditional automakers, regulatory and market challenges in key regions. MarketDash's risk assessment tool shows Tesla with above average volatility but below average correlation to the broader market, suggesting it could provide diversification benefits in a portfolio. Investing in Tesla is a bit of like dating someone with a lot of strong opinions. There is rarely a dull moment and your friend will definitely have something to say about your choice. But that doesn't mean it's the wrong decision. If you do decide to invest, position sizing is crucial. Even the most bullish retail investors should consider Tesla as part of a diversified portfolio, not an all or nothing bet. Here's a balanced approach to consider if you're intrigued by this retail investor phenomenon. Step 1. Do your own research. Don't just rely on headlines or analyst opinions. Dig into Tesla's quarterly reports, product roadmaps, and technology advantages to form your own view. Step 2. Consider appropriate position sizing even if you're bullish. Consider limiting Tesla to 5 to 10% of your portfolio initially. This allows for upside participation while managing concentration risk. Step 3. Consider dollar cost averaging rather than investing all at once. Consider building a position over time, particularly given Tesla's historic volatility. Remember that the most successful Tesla investors historically have been those who maintain conviction through volatility and focus on multi-year horizons rather than short-term price movements. Investing in Tesla is a marathon, not a sprint, except this is a marathon that includes occasional rocket boosters, unexpected detours, and a CEO who might tweet about anything at 2 a.m. Buckle up. What we're witnessing right now is truly historic. Never have before retail investors shown such strong conviction in a single stock during a major downturn. Whether this mass of individual investors proves brilliantly right or catastrophically wrong will be one of the most fascinating market stories of our time. If you're considering adding Tesla to your portfolio but want personalized guidance on positioning size and timing to track Tesla's performance and retail sentiment yourself, I partnered with MarketDash to offer a special discount on their premium plan. Use code FREEMONTH for 30 days free, giving you access to all the tracking tools I've shown you in this video. If you found this analysis valuable, please hit that like button and subscribe for more content on market trends and investment opportunities. Drop a comment below, letting me know if you're part of this retail buying wave or watching from the sidelines. Thank you for watching, and I'll see you in the next one.